Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. I am putting out a new buy recommendation. It is another commodity, but that's what the chart tells me. Today, I'm going to recommend buying crude oil. Sentiment is definitely against this call, which is one of the things I like, but let's get into it. I'm going to try to keep this short and sweet. This is a long term of crude oil. Big uptrend into the 2008 high, and then this big downtrend. Here's the two downward sloping trend lines that are forming the bearish channel. I actually called a bottom back here at about $10 back in 2020. However, now fast forward to today, we're slightly above our bearish channel, and you can see the consolidation in the form of a symmetrical triangle that's been going on for about 2.5 years. So that's what I want to focus on. Also, this is my elementary cycle analysis. It's very simple. There's much better cycle people than I. I'm a pattern recognition person, but I do employ some simple cycle things that I can understand. And this is suggesting we're going into uh, another year or so of upward prices in oil. Just one indicator. But this is crude oil. We're looking at that symmetrical triangle. And actually, when I'm looking at it on this basis, it is a descending triangle with a flat bottom and a descending resistance line. And you can see I've tried to buy oil here twice. I've got stopped out. I got stopped out, small losses. And now we're right down on our support line. So buying it here, my reward to risk is the best because if it breaks much under 65 in crude oil, I'm putting my stop at 64 on actual crude. That would get me out. So you're looking at, I don't know, 5% potential downside. And the upside is enormous if it gets through 75. If it can get through 75, it could go to $148 based on this chart. So one day at a time, this is where I would buy. And let's go to the next chart here. Seasonality is definitely in our favor. It looks like a low should be coming up here in the middle of March. And then, seasonally strong period is actually February through June. So just another thing that's on our side. It's just a tendency. This isn't etched in stone. I'm not basing my buy recommendation solely on that, but it is in our favor. I think this is really, really important. And this chart was provided by Tom McClellan, the great technical analyst. He has his own newsletter. You can Google it if you want, but I do like this chart. So this is the commercials. These are the big boys, the boys in the business, the Exxons, the Mobiles, all the big heavy hitters. This is the futures industry and the commercials, the big money. You got the trend followers, the hedge funds who are always late to the game. They kind of ride the wave for a while and then they kind of get messed up at the beginnings and peaks of trends. The commercials can actually make those trends change. So when they get down, so what this is showing us, this is the crude chart up here, but down here you can see this is they're always hedging to some degree because they're in the oil business, so that's the commodity they own. But when they're down here at really, really low levels, you can see that it's normally meant something significant. And so they are probably at their most bullish position that they've been going back to 2015. They've had one, two, three, four times they've been this bullish. And so while everybody's kind of down on crude because trend followers can't follow this kind of chop, they are anticipating higher oil prices and they're taking off their hedges. Volatility. This is the volatility index on the SIBO uh, crude oil. And so whenever I see something like below 35, that means the volatility is subsiding. Let's hope that stays that way. And that makes it investable. If it's way up here at a high level, I don't want to be investing in crude oil, that's for sure. But volatility is at the moment slow. I want to preference one other thing. The um, CPI is due out on Wednesday. That could cause some volatility, but I just wanted to point that out. Now, here's the actual investable instrument. I don't trade futures. I just want to get the direction right. I'm not trying to get the timing right. I'm not trying to use leverage. I'm kind of a vanilla guy. And so I'm buying this particular ETF, OILK. It does not issue a K1. So if you're trading in a taxable account, you definitely want to do this. I use it for both. If it's in a IRA, you might consider USO, but again, this is the one that I use. And here we have the same triangle. You'll notice it's not a flat support line, it's a rising support line. It's still the same thing. Here's support at 41, and I'm putting my stop at 39. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. I'm trying to make these shorter. Uh, Please like and subscribe. Thank you. If you'd like more detail, let me know. Thank you. Have a great day. Good trading to you next week.